Hi, and welcome to Magic Scanner website, a fundamental stock selector for KLSE and SGX financial market. You're about to learn the secrets to raking in double to triple digit return per annum in trading or investing, no matter how much time you've had to prepare. It doesn't matter if you've never had any past experience or education, this Magic Scanner will tell you everything you need to know without spending too much brain power. This is unlike any tool you'll find out there. It's the edge that most analysts and fund managers want or have. Go ahead and get yours now.
To all of you who thank you for attending our regular weekly Friday chart clinic that we do every Friday morning at 11:30, coming you live from our office in Jupiter in Kuala Lumpur. Right. I just want to do a sound check. All you are listening well. Okay, good. Okay. If you have stocks you want me to look at, please send it to me now, and I will look at them for you. And also, don't forget the agenda. One of the things we want to talk about is the uh, July 27, 13, our stock market outlook. I'll show you the agenda. Okay. And finally, we'll go on to the SS4A stock for analysis. If you have that, okay, some of you want to look at mass. Okay, now before we do that, our topic for today for our Friday chart link will be this was sent in by one of our premium members, Chan. Thank you for that. He sent me an article posting on the top 10 dividend stock, which is published in the Personal Money. So we will take a look at that and to see whether it makes sense to actually have them invested or not. Okay, and then we'll go on to the July 27, our market outlook talk for our outlook agenda. What are we expecting on that day? And there is actually a small fee for the convention. Okay, so that's and then finally we go on to the stocks. Okay, Vincent want me to look at Genting and Genting Malaysia. Okay, so without further ado, I'll pass you to our US correspondent and our gold correspondent, Bill Vermine, to talk about his outlook. All right, Bill, here you go.
Uh, I think you got it wrong, Martin. I'm not just that. I would say I'm also the Singapore correspondent because we've been doing quite a lot of work on the Singapore market and the benefits involved in investing in Singapore. So, but having said that, I'm going to share a few things on the background of what is going on in the world, which affects all markets. And the background is the basic common sense thing is that money moves markets. The more money that is put out into the system, the more that it goes into assets, which means stocks, which means property, which means gold, means everything is going to go up. So around the world, central banks continue to print and flood money into the system by buying bonds. And last night, the ECB, European Central Bank, they left rates unchanged and said they will have an easing bias in the months ahead. And remember, the rates in the ECB are only 0.5, so how much lower can they go? And they're even talking about negative interest rates where you have to pay if you put money in the bank. You pay the bank to keep your money. So that is how desperate they are to flood more money into the system. Bernanke continues to print. He did make a statement that they may cut back on their quantitative easing, that they'll taper. However, it was only words, it was not action. And immediately, all the other central bankers or Federal Reserve bankers said, hey, we're not going to do this. We are going to continue to print. And there's one small little detail that I think a lot of people may have missed, and that is, as we know, in January, Obamacare will come into force in the US, and that means he will give free medical care to millions and millions of people who have no health insurance. But they never mentioned how they're going to pay for this. So they said that one of the statements made was that they will have to ease liquidity in order to pay to, all of these doctors who are giving this free medical care. So this is actually very bullish for the market. And it's also bullish for healthcare stocks in the US. They will benefit from this. And insurance companies who now have to provide free medical insurance. In any case, I'm going to share with you a thing from Money Week, which is a great magazine from the UK, which is very objective and talks about how to make money, especially in the short term and also long term as well. And there's an article in it this week, just came out. It is why your best investment strategy is to do not very much at all. Now, isn't that interesting? They're saying don't jump in and out of the market. Don't get scared. Don't panic. If you're holding quality shares, quality assets, just hold tight because money is going to push your positions. The flood of central bank money is going to benefit all of your positions if they're quality shares. Now, I'm going to read a quote from this article, which I think is very interesting, and it confirms my point that money will continue to be flooding into the system. It's called A History of Failure. And it says this: the history of central banking is the history of failure. And this is not because bankers are stupid, but because we have given them an impossible job. In 1810, a committee was formed by the British government. Its task was to report on whether Britain should return to the gold standard or have an independent central bank to determine monetary policy. Now, the conclusion of these wise men should never be forgotten by investors. And here was their conclusion: the most detailed knowledge of the actual trade of a country, combined with a profound science in all the principles of money and circulation, would not enable any man or group of men to adjust and keep always adjusted the right proportion of circulating currency in a country to the needs of trade. So what they were saying is that it's impossible for a central bank to make these decisions. So they decided to go back to the gold standard because gold was a self-regulating mechanism. Gold could never be printed. So this sums up why you must always be prepared for central bank failure. And if central banking was difficult in 1810, what about today with the massive increase in the complexity of our current economy, and it makes it impossible? So my point is, don't think that the central banks are going to make the right decision, and central banks are controlled by politicians, and politicians are only interested in maintaining their power, maintaining their relationships, maintaining and continuing to get reelected. And to get reelected, they have to print money to give to all those people who don't work, who are on welfare, who get entitlements, and that's how they keep getting reelected. So my point is, inflation looks like a foregone conclusion. And not in 1810, they decided they didn't want that, so they went back to gold. But I don't think they will ever go back to a gold standard because politicians will never give up control of their money printing. So having said that, do stick. And then they did mention in this article, which was quite interesting. Only one country do they recommend to invest in. It says Singapore. It's one of the few places in the world experiencing price reality. Triple A country, very good management of their economy, very low taxes. They encourage growth, they encourage savings, they encourage investment. So they said, do look at some of the quality blue chip shares in Singapore, and this is what Martin and I are doing for our global wrap portfolios. We are focusing on Singapore, not just for capital gain, but for safety as well, and for capital appreciation, in which perhaps will be the strongest currency in the world. And so having said that, I wish you all the best. By the way, Martin and I are speaking at Azizi Ali's seminar tomorrow in the Subang Holiday Villa at 9 o'clock. It will be in Basa for our Malay friends, and it will also, Zizi will speak on property, his outlook for property in Malaysia. Martin and I will speak about the share market and the background, some of the things which I just mentioned today. So having said that, I wish you guys a great week ahead. Maintain your cool, don't panic, continue to do what you're doing, and that way you'll prosper. Okay, Martin, go ahead.
All right, thanks a lot. Bill, with his usual very bullish gold outlook and also the market outlook. Now, those of you who don't know, gold Gold has been a Bill's agenda for a long time. So if you have any question about regarding in gold, you can always send it to him. He'll always give you his opinion. And today, even this morning, we did hear about possible gold going up to 800, which is from one of our analysts in CIMB. So now, like it or not, this has been always the agenda of the money printing. So to scare the people out from it. Now, so the bottom line is be prepared for gold to go lower, okay, then before it goes higher back again. So that's the message that we have so far. Okay, I did have a query here. Pardini, someone want me to look at Pardini. I'll keep in mind of that one. All right. Okay, the next thing I will go through is those of you who don't know, we are doing a stock market outlook agenda. We are almost half full now. We still got like another month to go. Just show you what's be happening on that day. It will be on the Saturday, 27th of July. We'll be doing our outlook. Second half year outlook. Okay, and the things that we'll be covering is very similar. I'm going to be showing you that. Just give me a minute. I'll pass a copy to Bill here. Is the agenda. Now Bill hasn't given me the agenda yet, what he wants to talk about. Bill, remember to pass it to me when you're ready. Okay, what is that one you want to talk about? uh, Generally, let me just show you what we'll be talking on the timetable in here. Now this is the agenda that will be on that day. We'll start off on 9 o'clock to 9:30. The arrival will start at 10. I'll be doing the opening. It will be in the UEM Convention Hall in there. Benny will be the first speaker. He will talk about an hour about trading opportunities in the second half of 2013. So he'll also talk a bit some stocks to look at from a technical stand-wise. Right, then we have a coffee tea break. Then we have a company presentation from Mr. Fu Senjin from ECS ICT. Okay, ICT Berhad. Let me get that correctly. And this is still in the draft stages, so we just finished. And Bill is going to probably talking about his usual stock market stories and things to be watching out. That will be a 45-minute talk, Bill. Okay. Pretty short one. That will take us until lunch, and then after lunch, I'll be doing the most difficult part is to keep all of you awake. In there, can Malaysia beat the odds in year 2013? A bit market outlook and a forecast for second half of 2003, where the year end is likely to end. Okay, and then we just have a 15-minute open dialogue between the audience and Bill and myself, and we probably close up at 3 o'clock. We will stay around for the audience for another hour or so, just to chit chat and talk. I think the whole point of this second half outlook 2013 is to really look at the sectors and stock pick that we think has benefit. Now the first one we did was in April, just before the election, and those stocks we talk about has done quite well if you have bought it before the election. And the same thing, what we're trying to do is twice a year format, looking into that. All right. So okay, so where it's going to be held? It will be held at the UEM Convention Hall. Those of you who've been to the April talk, just next to the Federal Highway. For those of you who in outstation, those of you listening from Kuching and Penang, do consider coming. You still got time to plan for this one-day event. On that time, you can, we don't start that early. We're starting at 10 and we should finish off by 3. That makes a lot of time for you to catch your flight back. And we also like to meet you. And all this while, we've been talking to you so-called over the internet. We don't really know a lot about you, nor even meet you. We hope to, establish some sort of acquaintance with you and build a relationship from that, right? Because we still want you to make money on that one. There is a small fee for this, a very small fee, and you can go to the website and check it out for that one. Right? Wow, I got this whole stock 10 pick. Okay, you want me to analyze all the stock pick? I don't think I have time to analyze too many of those stock pick. Okay, I not sure who sent me that one. Okay, so do take a note of that. This agenda will be available on the website or be sent out to you once we are. Do consider coming on. This is an event we host it for the market outlook. Okay. Any question about this event? All right. Move on to, yes, we did something here. Carlsberg. Oh, Hannah want to look at Carlsberg. Okay, we'll look at Carlsberg too. We'll look at Carlsberg. Let me just type that in here. Okay, next one will be the top 10 dividend stocks. Now, this is quite interesting. Here we go. This is we'll make any of you want this a copy of this? This is from scanned by one of our premium subscriber who sent it to me, asked me to take a look at it at the top 10 dividend stocks in Malaysia in personal money. Just want to share with you. Let me just blow this up a bit more so you could see it here. A very nice chart here. Top 10 in there. Now, if you just take it pure on surface, just to buy whatever they buy, I don't think you're going to make money, right? Now, very interesting. I just want to highlight here. You can see these are the top 10 dividend stocks in Malaysia. You got CYL, which is in the bottling packaging business, Ujitech, consumer electronics, some consumer electronics. Now, some of these are actually Taiwanese company, and my experience with them, they tend to pay out very high dividend. Partly is to repatriate the profits back in here. Now, just pay note this here is the gross dividend payout ratio, which actually paying more than the net profit, which means they are actually using the retained earnings to pay out, or possibility borrowings too to pay off. So I'll be very careful, provided if the industry that they are in are pretty matured. In the case like JTI, which is paying about 108%. So those company which doesn't need that much of a cash to grow will be paying out from the cash that they have, because they have a lot of cash and they don't know what to do with it. So at times they will decide to pay back. That's why with the high pay. But if you look at industry like consumer electronics, okay, there are three of them: Ujitech, Formosa, and VS industry. We do believe some of these need to plow back, and some of them, they shouldn't be paying dividend at all, right? Because they need for capital expansion. Now remember, if you're in the manufacturing, those of you who have worked before, I have worked before in the manufacturing, you would know it is a capital intensive industry where a lot of money need to reinvest back in there. Star publication also, another one here. You got one, two. I still remember Acoustech. We invested some time back, about 2 years ago, around 60 cents. It is still doing around this price. At that time, the dividend was around 10%, 12%, but since then it has dropped a bit. They make speakers for the American brands that they have it here down at Kuala Lumpur in here. So we learn our lessons when we invest in consumer electronics. We pay high dividend because we actually fall into the value trap. Okay, a notable insight here is Tasek, a cement producer, which is heavily owned. I think about more than 5% are owned by Aberdeen Asset Management, partly for its good dividend, lots of cash. Play on the construction rather than buying construction company. You buy purely on the cement producer Tasek in here, right? JTI, we do have position on that. We avoided star publication because we felt that there's a decline on the sales in terms of the newspaper. As a matter of fact, less and less people are reading the so-called hard copy of the newspaper. More are turning into the online. Would you all agree to that? Okay, I'd like to hear your feedback. Okay. What do you think of these stocks, the top 10 dividend stocks here? Okay. Okay. Now, make a note here that this company has 10-year continuous year of dividend profit and positive cash flows. Well, do take note, some of these do pay dividend every year. But if you don't get any increment in the price gain, like GAB or Carlsberg, Nestle, then you don't get the 8 to 12% return that we are looking for every year. Okay? So do take note of that. Okay? So, all right. MCA, oh yeah, bias reporting. Yes, Henry. Okay. So now we're going to be any question on that, or some of you just want to any comment on this top 20 dividend stocks? I'd like to hear your feedback. Okay, that'll be great. Do not read the star. Okay, even some of the audience that sent in do not read the star. Thanks a lot, Henry. All right, so now we're going to do to the second part of it. We're going to be looking at the stocks. The first one will be MRCB, followed by Mas, Genting, Pardini. We got a fair bit to do here, about 6 of them. So if you have 1 or 2 more, send it to me now quickly, okay? We're going to be taking a look at that. All right, the first one will be MRCB. Let me just make this up a bit. Okay, MRCB. Now, MRCB, this is quite a nice one in here. Deep big, a 2-bar reversal, holding up $1.50, finally breaking up to $1.50 in here. You got a nice freedom swing here, about 170. I would maybe wait. If I'm a bit conservative, I'll wait for a slight pullback to above 155, or you can jump into it. Now notice here the volume is definitely a bit low, so the upthrust, or not so upthrust, the up movement going up here would definitely slow down as you have 3 up bar in here. Having said that, it's a nice 5-day line showing breaking above 200 moving average. That would prove to be good too. Okay, another stock being sent in is yes, Carol, Avanta, of course. Avanta, I will do that. Okay, that will be the last one. Okay. Next one is the favorite of everybody, which is a recovery play, is MAS. Uh, okay, a lot of people are playing good. Now, like it or not, MAS has broken below the ice. This is what I mean in here. It's going to have a tough time in here. The first price rejection was rejected at 31.32 here. So it's plowing back in here, holding up in here. That's very little edge actually. As long as once you break through this major